Thank you very much. It's a pleasure to be here again today here in Shanghai. Like Andrew said earlier on, this is our 15th year in Shanghai. A lot has changed during that time. When we first came to Shanghai, like Andrew said, Chinese leasing was pretty much unheard of. China was, of course, an important place for shipbuilding, but not nearly as it is now. 15 years later, things are very different, and China is truly a powerhouse. And it's quite interesting that despite all of the geopolitics taking place, despite all of the noise that you hear on the news channels and from Washington and from other places, and perceived threats about China's dominance, the fact is that China remains dominant in shipping, in shipbuilding, in shipping finance, and honestly, I don't see anything that's going to threaten that for the years to come. First, a couple of things about Marine Money. I mean, Marine Money is based in the US with offices in Greece and in Singapore. We are effectively a shipping market intelligence provider. We speak to a lot of people around the world, shipping finance providers. That may be traditional banks, it may be leasing companies, it may be alternative finance, all sources of finance to the shipping industry. And we get a lot of information, so we know what's sort of flavor of the month. We know what's happening, which finance options are more popular, which finance options are less popular. We have a magazine. The magazines are actually out on the registration desk if you'd like to pick one up. We have a quarterly magazine, and we also have a weekly newsletter which reports on all of the, some of the biggest anyway, ship financing deals which we hear about. These are the places where we do the conferences. It's pretty much all of the major shipping centers on the planet. 2 months ago we were in Singapore. About a month ago we were in Greece. A couple of weeks ago we were in Korea. Today we're here in Shanghai, and in 2 weeks from now we're in New York, and so on and so forth. So I mean, like I said, we speak to all of the finance providers. We know a lot about what's going on. You know, my personal sort of feeling about bank finance is that it sort of, it comes and it goes, it ebbs and it flows, different types of finance. I mean, if you go back to the 1990s, the truth is that almost all finance was provided by traditional shipping banks. And that had been the case for, for decades. The shipping banks were there giving standard finance, 60%, 70% on the asset values. They looked at the cash flow, they looked at the owner. Everything was much more simple in those days. With the onset of the very good markets in 2004 to 2008, when China joined the WTO and freight rates went through the roof, the capital markets, especially in the US, became quite dominant. So we saw a lot of companies, especially Greek companies, I might say, doing IPOs in the US markets, and they were supported by finance from the traditional banks. So that was that 5-year period, perhaps 2004 to 2008 or 9, let's say. The next period, you could say from 2010 to 15, when the market crashed like this, you could say that was the advent of private equity. Private equity, again, from US sources principally, but also European sources, came into the market because what did they believe? They believed that the vessel values had crashed and it was a great opportunity to get back into the market. Unfortunately, what they did was they put a lot of money into new buildings and they overcrowded the market. They simply ordered too many ships, and the market couldn't absorb this new equity going in and these new ships being delivered. The next period, you could say 2015 to 2020, you could say was the era of Chinese leasing. You know, that was when the shipping banks had problems. They didn't really want to give any more loans, and especially at the fairly high asset values. And what did the Chinese leasing houses do? They were willing to come in. They were willing to give sort of higher leverage with slightly higher pricing. And they captured a lot of the market, the European market, the US market, the Asian market. A lot of the big ship owners at that point introduced themselves to Chinese leasing. It maybe wasn't easy to begin with, But over the years, it became more mainstream. And up and, through to 2020, you could say that was the period of Chinese leasing. From 20 to 25, you had the period of COVID and all these difficulties. You could say that alternative finance came around. So a lot of credit funds crept up in Europe. Chinese leasing continued to be strong. Japanese leasing continued to, became stronger. So that was the period of, alternative, you could say, finance. And that brings us to today, to 2025. What's flavor of the month today? I mean, what do we see anyway at Marine Money as being the kind of more popular type of finance option? Well, actually, there is a drift back to traditional bank finance. And that's for a couple of reasons. One is that owners have made a lot of money over the last few years, and therefore they no longer need higher leverage. They can live with 50%, 40%, whatever it is, maybe up to 60%, but they certainly don't need any more than that. And therefore, the competitive advantage of the Chinese leasing companies who were giving 70 and 80% is less in demand today than it perhaps was a while ago. And also because there's such a lot of pricing, there's such a lot of competition, pricing has become very competitive, and only the traditional shipping banks really can give the attractive pricing. So that's my take. It's almost like a sort of 5-year blocks of different types of finance, and currently we are, I would say, just at that moment when there's a little bit of a transition back from the alternative finance back into traditional bank finance. So like I said earlier, China continues to dominate. From some figures here in shipbuilding, China was responsible for 62% of the shipping order book in 2024. That's pretty massive. They are the largest ship-owning nation globally by value, according to Vessels Value, with this massive amount of $255 billion US. And there's 10,000 ships flagged under the Chinese flag. Now, a lot of these vessels, of course, are doing domestic trading, but nonetheless, it's a massive number of ships. This is an interesting one. Again, it shows shipbuilding from the point of view of various nations. You've got China, you've got South Korea, you've got Japan, which are by far the biggest, of course, shipbuilding nations. And then you've got the rest, and then there's a little dot up in the corner. That's China, that's US shipbuilding. It's probably only half a dot, but we put it as a full dot anyway. These are not our figures, they're figures from elsewhere. What President Trump, of course, is trying to do is make several more dots on this chart. I'm not sure whether it's going to be possible. If it is possible, it's going to be at least 10 years before it happens. So it's a long story. And we'll just have to see, how it goes. But I think the fact is, look at the red dots. China dominates and will continue to dominate. This is taken from our friends MSI. We have Woon here in the audience today. I hope you don't mind too much, Woon. This shows some recent quarters of new building orders, the types of vessels on the left, and the countries in which those orders were placed on the right. And again, if you see the latest quarter, which is quarter 3 of 2025, very recently, the green bar dominates. So most new building orders are still being placed in China. And interestingly enough, that is during a quarter where all this noise was taking place about USTR and all kinds of penalties and tariffs and everything else. Nonetheless, owners are choosing China as the place to order ships. And this is also from MSI, and this is again, the green bar here is China. We're now in 2025. We're seeing a really quite substantial chunk of that graph being green, being China. It perhaps narrows going forward. One reason for that is there's a lot of others coming in. That's a wait-and-see story, of course, but we're talking about Vietnam, we're talking about the Philippines, we're potentially talking about the US, but that's probably a long time down the road. But nonetheless, the green bar there remains extremely dominant for the foreseeable future. And in financing too, like I said earlier on, 10 years ago or so, In our league tables, Marine Money does a survey every year from the leading maritime finance providers in the world. And 10 years ago, Chinese leasing was about 12% of the total. Now it's about 35% of the total, which is extremely substantial, and therefore Chinese leasing has become increasingly more dominant over the years and continues to be so. But of course, there are difficulties, there are challenges, and there are a couple of things coming out of the US which potentially could alter the attractiveness of Chinese leasing finance. Coming out of the US, we have the Ships for America Act. This is, like I said earlier, President Trump's effort to increase shipbuilding in the USA. This may happen. It'll probably take a long time, but it's starting from a tiny, tiny base. And even if it doubles or triples or quadruples, it's still going to be tiny compared to the major ship-owning nations. You have the tariffs. Okay, the tariffs have caused a lot of noise worldwide with China, but with every other nation as well. It seems to be the case that there is a lot of noise, and then there is some kind of compromise with most places. And I think we're hopeful that in due course there will be some kind of reasonable balance of these tariffs on both sides, such that global trade can continue in a fair way. And then you have the USTR, which we're going to hear more about in a short time. This was the threat of penalties being put on Chinese built, flagged, and potentially financed vessels calling into the US ports. This has been paused for a year. The threat is still there, but anyway, we'll see how it goes. But that's what I'm saying. Mr. Trump, here he is. This is the restoring America's maritime dominance. This is what he wants to do. This is what he's saying. Whether he'll manage to do it, who knows? Here's the tariffs. I mean, basically, tariffs were just put on, on the whole world effectively, and then one by one, he negotiated with various countries and reduced them and came to some kind of, you could say, amicable solution. So there is a feeling we have, at least, having talking to a lot of people, that the international owners are, during this year at least, have been more frequently refinancing their sale and leaseback transactions. I mean, there's a lot of leasing companies in the audience today. They'll know more about it firsthand from their own experience. But probably it's only natural, and it's probably short term. We hope that it'll be short term. But nonetheless, I mean, if you see on that, this is the survey we did for last year, for ending December 2024. There are a number of the Chinese leasing companies, and China Exim Bank actually in #1 spot in terms of the new business, which they did in 2024. It'll be about 6 months from now before we see the 2025 figures. That'll be interesting to see whether there is any reduction in new business done. There may be, but that's fair enough. I mean, I think, like I said, these things come and these things go, and perhaps 2025 was not such a strong year. Probably 2026 or 2027 will be a much stronger year. This is the one showing new business volumes in 2024, and like I said, China Exim Bank is #1 in our survey. And other banks are ranked in the top 20, other Chinese banks and leasing companies. So in 2024, at least, it was a very active market. What's happening, like I said, with the traditional banks is they are pouncing on this opportunity to refinance some of the Chinese leasing, and also some new building opportunities from owners who are ordering in China and other places. There's not that many international banks doing this degree of shipping finance. There's maybe 15 or something like that. The trouble is, all of those banks are sort of competing against each other, and they're driving margins down. So although banks always complain about low margins, when there's strong business to be done, and when there's competition around, the margins go down. So, margins during 2025 have actually dropped from where they were in 2024 and 2023. And one reason for that, of course, is that the owners are not requesting such high leverage. They're probably only requesting maybe 50% leverage rather than 60 or 70 or whatever it may be. And therefore, when the bank fits all of their variables into their models, they can absorb lower pricing, and it still makes sense for them. One of the reasons for the competition are the Nordic bonds. I think the Nordic bonds are probably not something that Chinese companies have ventured into yet, but a lot of international shipping companies have gone to Norway to do bonds. These are very often unsecured. They're secured on the balance sheet of the companies. They're only really available to large-size shipping companies and mostly public shipping companies, but some private shipping companies have done them. But they've been very active. They can happily do $200 or $300 million, more than that as well. And pricing there has come down. It's still higher than traditional bank finance, but it's become an attractive source of finance in the international markets. These are some examples of deals that we have found from the Chinese leasing companies from end of 24 and through 25. Substantial deals, big numbers. The Chinese leasing companies continue to do what they've always done. They do so the larger sized transactions, which the traditional banks are unable to do or would have to do in a club deal with several other banks. And therefore, the Chinese leasing companies have that competitive advantage of being able to do on their own very, very large transactions. This is just a chart that we found showing US-China trade and whether there has been any kind of serious impact since the beginning of this year when Mr. Trump announced his tariffs. There's a bit of volatility, of course, in the market. US trade or Chinese trade into China has dropped, but Chinese trade into Southeast Asia and other places has increased. So, generally speaking, there's a fair balance. China remains strong. I don't honestly think it'll affect things too much, although some trade routes may be affected, but there are always other trade routes which can take up the slack. And this is my last slide. I think the world is a bit of we're in a tricky spot. We're not quite sure what direction to take. There's lots of finance options around. There's lots of geopolitical issues around. I think the whole decarbonization issue has no clear path ahead. But the world needs trade. I think that's the essential thing. The world needs trade and the world needs shipping. And however complex things may look, our markets, Chinese shipping and Chinese shipbuilding will remain strong. Thank you very much.